If you walk into an elite San Francisco party today, the ultimate status symbol is not a Rolex. It is not an Audemars Piguet. It is not even some limited edition supercar key casually placed on the table. The real flex is much quieter. It is a plain company-issued NVIDIA hoodie. And in Silicon Valley, that hoodie now says something louder than jewelry ever could. This person might be sitting on life-changing money. That is the strange new world NVIDIA has created. In most places, a luxury watch tells people you spent money. In Silicon Valley, an NVIDIA hoodie tells people you probably made money. Big difference. One is consumption. The other is ownership. And that difference is exactly why this story matters. Because the data behind this company is ridiculous. A poll of more than 3,000 NVIDIA employees suggested that roughly 76 to 78% of the workforce are now millionaires, not executives, not just founders, employees. The kind of people who used to sit in meetings, debug code, answer emails, and collect stock grants while the world was still sleeping on AI. And it gets even crazier. We are not just talking about people barely crossing the $1 million line. Reports suggest nearly half of these employees may have net worths above $25 million, and roughly 1 in 3 may be worth more than $20 million. That is not a compensation plan anymore. That is a millionaire factory. If you extrapolate those percentages across a workforce of around 36,000 people, NVIDIA may have created something like 27,000 millionaires. For context, Google's famous IPO created about 900 millionaires in a single day. NVIDIA did not just beat that record, it turned that record into a footnote. But to understand the wealth, you have to understand the survival story. NVIDIA did not begin as the king of artificial intelligence. It began in 1993, inside a Denny's diner with 3 founders, a booth, some coffee, and an idea that most of the world did not yet understand. These were not people walking into a guaranteed win. They were trying to build a company around graphics computing before most people understood why that would matter. They did not even begin with some giant corporate machine behind them. They had to buy a gateway 2000 computer, crack it open, and learn by taking it apart. Eventually, they got funding. But even that came with pressure. Venture capitalist Don Valentine backed them, but the message to Jensen Huang was brutally clear. Do not lose the money. The story is often told like a joke, but the reality underneath it was simple. NVIDIA had no room to fail, and they almost did fail. NVIDIA's first graphics chip, the NV1, was a commercial disaster. The market moved in a different direction, the product missed the moment, and suddenly this future giant was staring at the edge of bankruptcy. At one point, they reportedly had only 1 month of payroll left. With their backs against the wall, they built the Riva 128. That chip changed everything. It sold around 1 million units in 4 months and gave NVIDIA the oxygen it needed to survive. One product turned a near-death experience into a second chance. Then came the next major inflection point. NVIDIA went public in 1999 and helped define the modern GPU era, but success did not make them polite. As NVIDIA grew, it entered a bitter rivalry with Intel, and the fight became surprisingly petty. NVIDIA even created a troll website called Intel's Insides. It mocked Intel with satirical cartoons, including one that portrayed Intel as a turkey attacking the free market. Imagine a trillion-dollar company today doing corporate warfare through meme cartoons. That was the energy. But while they were trolling rivals, they were also planting the seed for something much bigger. In 2006, NVIDIA released CUDA, a platform that let developers use graphics chips for work far beyond gaming, science, medicine, research, data, and eventually artificial intelligence. This is where Jensen Huang made the kind of decision that looks insane before it looks genius. He started moving NVIDIA toward accelerated computing and AI before the payoff was obvious. That meant taking resources away from the core gaming business and betting on a future most people could not yet see. Then November 2022 happened. OpenAI launched ChatGPT, and suddenly generative AI was not some lab curiosity anymore. It was everywhere. Every major tech company wanted to train models, serve models, and build AI products. And almost all of them needed one thing: NVIDIA GPUs. So how did that stock explosion land in the pockets of employees? The answer is equity culture. NVIDIA did not just pay people salaries, it gave employees a way to own a piece of the machine they were building. And one of the most powerful tools was the Employee Stock Purchase Plan, or ESPP. Under the plan, employees could use part of their salary to buy company stock at a discount. But the real magic was the look-back period. Instead of buying at whatever the stock price was that day, the plan could use a more favorable price from earlier in the period, then apply a discount on top. In a fast-rising stock, that becomes rocket fuel. Here is the math that makes people stare at the ceiling. An employee who consistently maxed out the plan over a decade could have turned regular payroll deductions into millions. In some examples, the difference between normal investing and using the ESPP was not small, it was life-changing. There is even a legendary case of a mid-level NVIDIA employee who was not an engineer, maxed out the ESPP for 18 years, never sold a share, and reportedly retired with $62 million. That is the power of ownership, time, and refusing to interrupt compounding. But extreme wealth creates strange problems. If your average long-term manager has been at the company 15 years and is sitting on $20, $30, or $50 million, what exactly keeps them hungry? At some point, the paycheck becomes irrelevant. The stock grants become golden handcuffs, and the workplace starts dealing with a new problem: employees rich enough to coast. Inside NVIDIA, this has been described as a kind of coast mode. People are still employed, still attending meetings, still technically working, but financially, they are already semi-retired. It sounds funny until you realize this can become a serious corporate risk. Silicon Valley has seen this movie before. In the 1990s, Dell's stock created thousands of so-called Dellionaires. But when enough people became rich enough to relax, the company began to lose its edge. Wealth is powerful, but inside a company, too much comfort can quietly become decay. That is why Jensen Huang reportedly addressed the issue directly. In plain English, the message was, "Do your damn job." Because the thing that made employees wealthy is the same thing that can destroy the company if everyone stops pushing. Equity works only when ownership still comes with responsibility. And there is another reason some of these people keep working. In San Francisco, being a millionaire does not always feel like being rich. A home can cost millions. Taxes are brutal. Lifestyle inflation is everywhere. So even someone with $1 million in stock can still feel middle class in one of the most expensive cities on Earth. So NVIDIA's story is not just a story about AI chips. It is a story about leverage. It shows that one of the greatest financial edges is not always starting your own company. Sometimes it is finding a company with explosive potential, earning equity, and holding long enough for the compounding to become almost ridiculous. The employees who became Deca millionaires did not get there by jumping from startup to startup every 2 years, chasing a slightly better title. They got rich by optimizing for trajectory over brand name, ownership over salary, and patience over noise. They went long, and that is the real lesson. NVIDIA did not only create wealth because its stock went up. It created wealth because employees owned part of the upside, stayed long enough to benefit, and worked inside a company that kept compounding. That is capitalism at its most explosive. Ownership, timing, execution, and patience all hitting at once. So the question is not just whether NVIDIA employees got lucky. The better question is, what kind of company, asset, or opportunity are you willing to hold through the boring years before everybody else finally understands it? Because by the time the hoodie becomes the status symbol, the real money has already been made. But this is where the story gets deeper, because NVIDIA did not create Millionaires by accident. It built a system where patience, stock ownership, and explosive timing all collided at once. And once you understand that system, the hoodie stops looking like clothing. It starts looking like proof of one of the greatest employee wealth machines in modern history. The first thing to understand is that NVIDIA employees were not just earning salaries, they were earning ownership. And ownership is where the entire story changes. A salary pays you once. Equity pays you if the company becomes more valuable. And when a company goes from important to unavoidable, that equity can become absurdly powerful. This is the difference between working for money and owning a piece of the machine that prints value. Most workers only collect wages. NVIDIA employees were collecting wages plus stock grants, stock discounts, and long-term exposure to one of the fastest growing companies on Earth. But none of this looked obvious in the beginning. NVIDIA started like most legendary companies start, broke, uncertain, and misunderstood. 3 founders sitting inside a Denny's diner were not trying to become Wall Street royalty. They were trying to survive long enough for the world to catch up to their idea. They were betting that graphics computing would matter before the mainstream market fully understood it. At the time, the personal computer industry was still young. Gaming was not yet the giant it would become, and the idea of graphics chips powering artificial intelligence would have sounded insane. And the early company almost collapsed. Their first major chip, the NV1, missed the market. It was built for a world that changed faster than they expected. Developers moved in a different direction, the product struggled, and NVIDIA found itself burning cash with almost no time left. This is the part people forget when they look at a trillion-dollar company. They only see the final chart. They do not see the years where the company was one bad decision away from disappearing completely. With only a short runway left, NVIDIA had to make the kind of move that defines companies. They built the Riva 128. It was not just another chip, it was the rescue mission. It sold around 1 million units in just a few months and pulled NVIDIA back from the edge. That comeback mattered because it created the foundation for NVIDIA's real identity. This was not a company that simply followed markets. It survived by making hard technical bets before the payoff was obvious. That pattern would repeat again and again. In 1999, NVIDIA went public and helped popularize the modern GPU. But even after going public, the company was not treated like the inevitable winner it later became. It had rivals, doubts, and brutal competition. Intel was one of the biggest names in computing, and NVIDIA was still fighting for its place. The rivalry got so petty that NVIDIA reportedly ran a parody site mocking Intel. That detail sounds funny, but it tells you something important. NVIDIA had the personality of an underdog. It was aggressive, technical, stubborn, and willing to punch upward. Then came CUDA in 2006. This was the quiet move that changed everything. CUDA let developers use NVIDIA's graphics chips for work beyond gaming. Suddenly, GPUs were not just for rendering explosions in video games. They could accelerate science, research, simulation, medicine, and eventually machine learning. But at the time, this was not an obvious money machine. It was expensive, technical, and early. Most investors did not fully understand how important it would become. That is usually how massive opportunities look before they are obvious, confusing, boring, and easy to underestimate. Jensen Huang kept pushing anyway. He moved resources toward accelerated computing and AI long before the market rewarded it. That is the part people misunderstand about vision. Vision is not saying the right buzzword after everyone else believes it. Vision is spending money before the applause starts. For years, that bet looked patient more than glamorous. NVIDIA was still known heavily for gaming. Gamers cared about frame rates. Data scientists cared about compute. But slowly, quietly, the same chips that made games look better started becoming the engines behind modern artificial intelligence. Then ChatGPT arrived, and the entire market woke up at once. Suddenly, every company wanted AI. Every CEO wanted a strategy. Every data center needed more compute. And NVIDIA was already sitting at the center of the supply chain. That is why the stock did not just rise, it erupted. The world realized that NVIDIA was not only selling chips, it was selling the shovels for the AI gold rush. And when everyone wants to dig, the shovel seller can become unbelievably profitable. And because employees owned stock, they did not just watch the explosion from the sidelines, they participated in it. Every restricted stock unit, every employee stock purchase, every share they held became a piece of the boom. This is where normal compensation turns into wealth creation. A salary helps you pay bills. Equity lets you benefit from expansion. When a company compounds hard enough, the employee who simply holds can end up building more wealth than someone chasing higher paychecks somewhere else. The employee stock purchase plan made this even more powerful. Employees could use part of their salary to buy NVIDIA shares at a discount. That discount mattered. But the look-back feature mattered even more because it allowed employees to buy based on a favorable earlier price. In a slow-moving stock, that is nice. In a stock that is ripping upward, it becomes a cheat code. You are buying below where the market already moved, getting a discount, and then watching the value rise with the company. That is how payroll deductions, which normally feel boring, became millionaire fuel. The employee did not need to day trade. They did not need to predict every quarterly report. They just needed to participate, stay employed, keep buying, and not panic sell the upside. That last part is critical. A lot of people receive stock and sell too early. They lock in a small win and miss the monster move. The NVIDIA employees who became truly wealthy were often the ones who held through volatility, boredom, doubt, and temptation. This does not mean concentration risk is harmless. Holding a lot of one company's stock can be dangerous. If the company collapses, your job and your investments can get hit at the same time. But in NVIDIA's case, the people who held through the right company at the right time saw historic results. The legendary stories are almost unbelievable. A mid-level employee, not even necessarily an engineer, maxes out the plan for years, holds the shares, and eventually walks away with tens of millions. That is not a normal retirement plan. That is ownership meeting an explosion. But now, NVIDIA faces the strange downside of success. What happens when thousands of employees are rich enough to leave but still show up to work? What happens when managers have more money than they need but the company still needs them hungry? This is the coast mode problem. When someone is financially independent but still on payroll, motivation changes. The job becomes optional. Deadlines feel less urgent. Meetings feel less important. And suddenly the company has to manage people who are technically employees but psychologically semi-retired. Dell saw a version of this decades earlier. Its stock created thousands of wealthy employees called Millionaires. But when too much wealth turned into too much comfort, the company started losing urgency. That is the hidden problem with sudden employee wealth. It can build loyalty, but it can also soften the edge. That is why Jensen Huang's reported message matters. Do your damn job. It sounds blunt, but underneath it is a serious truth. The wealth came from execution. If execution disappears, the machine that created the wealth can start breaking down. And yet, not every NVIDIA millionaire feels truly free. In San Francisco, $1 million can feel shockingly ordinary. Housing prices are brutal. Taxes are heavy. Childcare, schools, insurance, and lifestyle inflation can devour money faster than people expect. That is the irony. In most of America, $1 million portfolio sounds like victory. In parts of Silicon Valley, it can feel like the starting line. This is why some employees keep working even after getting rich. The number is big, but the environment is bigger. So the story is more complicated than just employees got rich. It is about timing, equity, risk, company culture, cost of living, and the psychology of staying hungry after winning. NVIDIA created an incredible amount of wealth, but wealth always creates new problems. For viewers, the lesson is not to go chase the next NVIDIA blindly. That is how people get wrecked. The lesson is to understand the power of ownership. A normal paycheck can pay your bills, but ownership is what gives you upside. That ownership can come from company stock, an employee stock plan, index funds, a business, or any asset that grows while you keep contributing. The key is not noise. The key is getting exposure to productive assets before the world fully prices in the future. The NVIDIA millionaires optimized for trajectory over title. They did not just ask, who pays the most right now? They asked, or at least benefited from, what company is becoming more important every year? That question can change the entire direction of a career. They optimized for ownership over appearance. The hoodie became more powerful than the watch because the hoodie symbolized equity. The watch says money went out. The hoodie says value was created, held, and compounded, and they optimized for patience over constant movement. In modern careers, people are told to hop every 2 years, chase the next shiny thing and never sit still. Sometimes that works, but sometimes the biggest money is made by finding the right rocket and staying strapped in. That does not mean loyalty always pays. Sometimes loyalty gets exploited. Sometimes stock goes nowhere. Sometimes companies fail. But when skill, timing, ownership, and company trajectory line up, the result can be life-changing. That is why this story matters beyond NVIDIA. It forces a bigger question. Are you only trying to earn more income? Or are you trying to own more upside? Because income can improve your life, but ownership can completely change it. The NVIDIA hoodie became a status symbol because it represents something deeper than fashion. It represents being early, being useful, being patient, and being paid in a way that allowed ordinary employees to participate in extraordinary upside. So the better question is not, how do I find the next hype stock? The better question is, what valuable skill can I build? What high-quality system can I join? And what ownership can I accumulate before the rest of the world fully understands the opportunity? Because by the time the hoodie becomes the status symbol, the real money has already been made. What do you think? Is NVIDIA the ultimate proof that employee ownership works? Or a warning sign of what happens when one company creates too much wealth too fast? Drop your thoughts in the comments, hit subscribe, and I will see you in the next one.